For decades, there was this number, a high-water mark that a lot of people thought the Japanese market would never, ever reach again. Well, in a pretty stunning turn of events, it just did. So today, we're going to unpack this new record high, take a look at the forces behind this historic rally, and figure out what it all means for the future.
Okay, this right here, this is the number that has everyone talking. On August 14th, 2025, Japan's benchmark Nikkei index didn't just inch past its old peak, it absolutely smashed through it, closing at a staggering 43,378. And to really put this into perspective for you, the last time it set a record was all the way back in 1989. For over 30 years, that old number just loomed over the entire Japanese economy. So shattering it? Yeah, that's not just some market event. It's a huge psychological milestone.
All right, first up, let's talk about the new record itself. I mean, this was a stunning rally that really put Japan firmly back on the map for global investors.
But that's the big question, right? How did this happen? Was it just some kind of sudden fluke? Or are there some really powerful forces driving things behind the scenes? Well, in this explainer, we're going to break down exactly what's pushing these historic numbers.
So to really get how this happened, we've got to look beyond just that one big headline number. Let's pull back the curtain and take a look at the key indicators from that record-breaking day.
And you know, this wasn't just a rally driven by a couple of big tech stocks. The really crucial thing here is that the broader TOPIX index also hit a record high, and that tells us that the buying was widespread. This was a powerful, broad-based surge of confidence that spread across the whole market. So what's fueling this fire? Well, one of the single biggest drivers is something people are calling the weak yen effect. Let's break down exactly how that works.
It's actually a pretty simple idea, but it is incredibly powerful. When the yen is weak compared to the dollar, Japanese companies that sell a ton of stuff overseas, think cars, electronics, they just make more money on those sales when they bring that cash back home and convert it into yen. And of course, higher profits usually mean higher stock prices.
And here's the number that's making it all happen. With the exchange rate hitting around 147 yen to the US dollar, Japan's huge export sector suddenly has this massive tailwind pushing it forward. This whole currency situation created two groups of clear winners. First, you've got the export-heavy companies like automakers. Investors were just piling into those stocks. And second, the market's overall strength made stocks that pay high dividends a really attractive and stable place for people to put their money. But look, this isn't just a story about Japan. To really get the full picture, we need to zoom out and look at the powerful global crosswinds that are helping shape Japan's success right now. So, on the world stage, three things are really adding fuel to the fire. First, some recent price data out of the US basically calmed everyone's nerves about the Federal Reserve hiking interest rates too aggressively. And when the world's biggest economy is stable, that's good news for everybody. Second, that stability creates a really confident investor mindset. There's just less confusion, so people are more willing to buy. And finally, if you look around at other Asian markets, Japan's recovery looks especially strong, which is making it a magnet for investment in the region.
Okay, so we've covered how we got here. But the real question on every investor's mind is, what happens now? Let's look at the key signposts we need to be watching for the future of this market.
Looking ahead, it really all boils down to three things. First, U.S. policy. Is the Federal Reserve going to keep rates steady, or could a surprise move shake up global markets? Second, the yen's next move. Was this weakness just a temporary thing, or is this the new normal? Because if it reverses course, that could put the brakes on this rally fast. And finally, fund flows. You gotta watch where the big money is moving. Is it going to stay in those export stocks, or are we going to see it rotate into a new part of the market?
And all of that brings us to this one, final, really big question. After decades of stagnation, we have to ask ourselves, is this the dawn of a new, sustainable era for Japanese stocks, one that's fueled by real, fundamental changes, or is this rally, driven by currency trends and global events, just a temporary peak before another long, flat period? The whole world is watching to find out.